Okay, folks, this is all for my my crypto kitties. As you know by now that there is a war on crypto right now from the G20. And it happens to be right on the heels of the first meeting of the World Economic Forum. You know, they had the first press conference. I think it was earlier today. So the 15th, everybody's flown in, and I think that is probably why you have this breakdown. So this is from the 15th, and this is the XRP chart. Let me get myself a pencil real quick. Now, if you've been following me with XRP in the charts, I haven't done it as much as I probably should, given the volatility of this particular situation. If you've been following me, maybe a month ago, I showed you I showed you some breakouts and actually showed you an Andrews fork. And at the time, the Andrews fork, we were somewhere right in, I think we were right in here. Somewhere right in there. And according to the fork, I was saying that we're in a channel. If we fell out of the channel, that's, if you're trading, that was probably a good place to get stopped out. But I actually gave you the underlying stop. You have to go back and look at the video. It's still up. I actually gave you a place to get out. And according to the trading method, we would have made a significant amount of profits had we have traded this. But since cryptos are more of a buy and hold, we didn't. As we speak, I'm out of most of my XRP, and I'll show you why in a minute. But I was saying on the 15th, if you follow me on Twitter, saying on the 15th that even though there's high pressure selling in the red zone right here. You got high pressure selling in the red zone right here. It was actually holding the trend line. Where it's actually holding that trend line and forming what we call a flag. Because you notice we got flags here and here. And crypto seem to respond to flags. They seem to respond to flags with direction. Now, when I talked about this flag, I think I talked about it actually on a hangout, that these things love flags. And you can already see the trend line. You can already see the trend line. And you can also see the downtrend line. You can also see this, like I said, the support, which is right here. And I was saying that the support line and the trend line was forming a flag. And we're waiting on the flag to either take an upside or a downside. And on the 15th, it came up against the trend line and made a downside move. It bounced off and made a downside move. So it violated the flag to the downside, and that is that's a sell signal, especially for cryptos. Just like these over here were buy signals. Went to the upside, these were as a selling signal to the downside, especially when you marry it with the fundamental news of the exchanges being under attack by the G20. And they're wondering what to do with the cryptos. There's other news that is just going on with the cryptos. I'll actually get into that maybe tomorrow or maybe a little later. And there's actually some stories that I found that I think I had told you about Venezuela and Argentina and Estonia and a few others that are thinking about bypassing the banking system and going to cryptos, which is worrying the G20. So that's possibly why you're going to have either the cryptos attacked or actually reined in. And it's like Dollar Will says, the charts will reflect it first. And the charts were telling you that this is what was up well before the actual news came out. So we have a violation to the downside. And you see a rise in selling pressure right there. See a rise in selling pressure that coordinates with these. Like I say, this is up here. Up here is the danger signal where if it's going to make a move to the upside, according to the Fibonacci chart, this is oversold. Okay, so this is danger or decision point. If it's oversold according to the Fibonacci chart, if it breaks out and retraces, then it will move back up into the green, which is right up here, which is like a 50% retracement, which it did not make it since it broke down. Now we're into a new move. And that was yesterday. And this is today's chart to show you how, like I say, especially for these bad boys, the charts don't lie. Now this is Ripple for today. Right here is the old trend line. This is the old triangle right here. You can actually still see it. I left it in. That's the old triangle. That's the violation. And what we have now is extreme selling pressure to go along with it. So that's an extreme break. So now we're down. Now we're down, what, 1, 2, 3 support levels. We're back down to where the break of the big breakout was back a month ago, under extreme selling pressure. Now, according to our initial movement, if we were trading, our trades would have brought us out here. If you were selling or half of it out, you've been completely out right here. If we had been trading this, and definitely a full stop was right here, which is this is where I got out right around here, somewhere around in here. I got out according to the channel. I think it was, I do believe I got out somewhere. I think it was right here. For the most part, I'm still in a little bit because it's flooded. I can't get into Binance to actually move the stuff. So I can't sell the 200 shares of Ripple. I still have 200 coins I still have. So I have to wait it out, but it doesn't matter because I think I bought them at like $1 or something like that. So if I'm in or out, I might take a small hit, but it'll be very, very small, if that. What I'm saying is that this is a very good channel. Okay, so as long as it's in this channel and swinging to the downside, if you believe in it, you would buy somewhere down in here at its lows. Somewhere down in here, according to this line in this channel. In fact, I'm gonna put this channel up on my Twitter. So you this chart up on my Twitter, so you can actually look at it and examine it for yourself. But if you're buying, you buy here along these support line, this bottom support line. If you're selling, if you're selling, if you have shares you want to get out, then you would get out up around in here if you're going to do that. But hopefully you're out already, or at least if you're holding and you want to accumulate along this line. If it falls out of this trend, if it falls out of this trend line, if it falls out of here, if it falls out of, let's see if I can get it. If it falls out of this, off this trend line right here, then we're into something else. Then your next level will be down below this flag right here, which is right around, I think that's around that's around 60 cents, which is really, really low. If you want to accumulate, if it falls out of this channel, I would look for it like around 80 to 60 cents. Then we're into other levels, but we'll wait to see if it's going to stabilize. But I wouldn't be buying it right now because I think you would be wasting money. I wouldn't, you never try to accumulate on the way down, if possible. Downward pressures for selling, not accumulation. So you wait for, if you're waiting for it to turn, especially in these volatile issuances, this is for selling pressure. This is not for buying. If you want to buy, wait till it stabilizes. Wait till we get a sideways movement and some kind of support, because we don't have any support right now. It's falling through three support levels, so this is almost a free fall. So like I said, there's two things you don't do. You never try to catch a bullet going up, or you never try to catch a knife falling down. So this is we've had the bullet going up, and now we have the knife falling down. If it stabilizes, this is a point where you start accumulating. For you buy and hold, wait till, since it's already violated the second flag, the first flag, I would wait till it violates the second flag before I even think about start buying, which is around 60 cents. So if it falls below that, then we have to wait to see what they're going to do with cryptos. But like I said, I'll put this one up on my Twitter, so you guys can look at it or print it out or save it to your hard drive and study it, because it's a fascinating study in technical analysis. It's a fascinating study. So, which is one reason why I'm doing it. It's it's almost like worth the price of the plane just to be in it. Let's go to the next one. We're gonna go to what? We're gonna go to Bitcoin. Now, this is the 15th of Bitcoin. Okay. If you've been following, and hopefully you have been following me, and when I talked about Bitcoin, I told you that it had broken out an initial flag to the upside, which was, I do believe, right in here somewhere. Its initial flag, it had broken out and started to go sideways. So we have sideways pressure right. We had sideways pressure right here. It started to form a base along this in sideways motion, and so it finally formed a flag. And like I said, these things love flags. So it formed a triangle, formed a flag, and we had a base around, or support around $12,000, and we had a range when it bounced back up between 17,000 and 12,000 at the bottom, or thereabouts. And so we had what we had was a downward trend. Like I said, you can see the downward trend right there, downward trend line. and support, form your flag. Like I say, these things, especially Bitcoin. Bitcoin loves flags. Form the flag. Your pink. This peak is oversold or overbought. So it temporarily got into overbought and came back down to the green level. Now, if it had been fairly stable, this is the green line here would be where you accumulate. Where you accumulate. But like I said, these things love flags. As we come into a decision point, it didn't quite make it. It didn't quite make the decision point because we're expecting a decision point to be out here right around what, the 18th or so, but it didn't quite make it. We got into the green. We got toward the to the support line, and with the news, sometimes it doesn't make it. Like I said, you had to be ready. When you're a trader, you sit next to the exit. So when you get a signal, you do sell. What happened with the triangle? What happened with the triangle? Right there, you got a violation. You got a violation of the trend line. You got a violation of the triangle. And now you see where it violated the support line. Now that becomes resistance. And even though they're trying to buy it in the green right there, because that is a buy signal. That is we're not quite. That's a decision zone. We're not quite into oversold. Down in here, right here is the oversold support level, which is quite a ways down. Now we're talking about below 10,000. Talking about around the $7,000 level. But if you're buying and you trust it, I would say that's the first spot where you buy it, right around $9,000, somewhere around there. A really good place to buy it, because I didn't draw a whole bunch of support lines. I would say the best place to buy it, if it gets down there, would be, what is it, 7,500? If it gets down that low. I don't think it will, but if it gets down low, it'll be right around 7,500, because you're in selling pressure. You got a lot of selling pressure right now. Look at that. Look at the selling pressure you got. They're closing down exchanges, so people are trying to pull their money out. There's a flight to safety. It's probably be reflected in the dollar. That's probably what they're trying to do, drive it, support the dollar by closing down the crypto windows. So instead of bypassing the dollar, which evidently a lot of people don't want, they might be pushing that money out of the cryptos and into bonds and into dollars as a flight to safety. So that is Bitcoin for the 16th of January, 2018. Well, let's move on. We'll do one more. We're going to do, I actually like this one because I was thinking about parking money here. Okay. Because I thought this was fairly set. This was actually a really, really good chart. This actually looks like XRP like 3 weeks ago. We have our pitchfork. You had the pitchfork. You got a nice uptrend. It's following it quite nicely. It is actually staying in your go zone. It's almost the same pattern. If you're trading this, this looks just like XRP a month ago. If you're trading this, you'd have sold. You'd have sold. You'd have taken some profits right there. Right where you see these two where it goes into the sell zone right here. Did it twice. 1, 2. It actually sold. But if you're holding, it was a nice uptrend. And as long as it was in the uptrend, you're waiting for a violation. This down here would have been your hard stop. And for your hard stops, probably would have been right around, what is that? 1100, somewhere around there. Let me see. Your hard stop would have been around 1150, according to the red line, which is like 10% below the violation level for this channel, the Pitchfork channel. Now this was yesterday. You show how fast these markets move, because I think this is 4-hour bars. This is not day bars. These are 4-hour bars. I think you almost have to go to 4-hour bars to follow these things because it's so volatile right now. Nice up channel, staying in the green. Beautiful chart. This is what you want. You know, if you're a trader, like I said, you'd have sold at those 2 points and try to get back in. If you're trading somewhere around in here, you know, because these are buys. If you get a bounce, these are buys. Those are sells at the top. You know, and the red line is a stop. Anywhere along that red line, violates that red line, you get out. Okay. That was the 15th. Look at this. Look at this. Look how classic this is. And this is not hour bars. These are day bars. Look how classic this is. It violated the stops. It violated the channel. It actually violated the channel. Went below our stops. If you're out at 1150, which is where we said you should have been out, because it's right there. 1150 is right there. If you're out at 1150, you'd be sitting with profits right now. You'd be sitting on the sideline with profits right now, looking where to get in. You actually, if you wanted to get back in, you could have bought back in, but since you have it's violated downward pressure, now you got to look for where to get back in. You could have actually bought back in right here, but you'd have made just on this trade, you probably would have made, if you sold at the top, even if you sold at 1150 and bought it back at 950, you'd have made $250 per coin. But that's just trading. You know, if you're following the channel, just on that one move, what is it? $1,000 you'd have made 20%, 25% just on that one move. Even if you just if you sold it and bought it back. That's a 25% move, which is that's extremely profitable if you're trading. Again, because of the what's going on, there's a lot of selling pressure, lots and lots of selling pressure. You had a weak move to try to buy some of it back, but they couldn't hold inside the channel anymore. That's an extreme violation. It crossed the median line. The median, depending on where you are, you could sell at the top of the channel. You could sell at the median line. You could sell at the first violation, and basically your hard stop, if you're trading, is 10% or so below the violation line, depending on how you feel about whether you believe it's long or not. But your hard stop, that's how come you have hard stops, no matter what you're out. If I had followed my rules on XRP, I would have made a heck of a lot more money than I did. But I wasn't trading. I was actually holding. I was holding until I hit my hard stop. My hard stop was a lot lower than the line. If I gotten out at my hard stop in my channel, I think the hard stop in my channel was right around for XRP was $2.80. At this point, like I said, I'd have made like 50%. 50%. I've been holding 50% profit. If I had just been trading at the top, I'd have been holding. I'd have kept all the profit. I'd have been sitting at. I'd have been sitting at least 70% profit. I didn't do it. That's because, you know, it's a little harder to trade Bitcoins and that kind of stuff. And trading is a different kind of mode. Buy and hold is much more comfortable for me at this point in my career. But it is something that I'm showing you that this stuff actually does work. It actually does work. And it actually, they have this stuff for a reason. But I hope you guys enjoyed this. I probably have more. I'm not going to read it into the record right now. Something about Venezuela and their petrol coin that the United States is very upset about, which is something I told you earlier about OPEC and about Venezuela going around OPEC by going through cryptos. And I said the United States was going to get upset about it, and they are. But I will do that later. But with that, my crypto kitties, this is your lesson for the week. I'll try to post these things on Twitter if I can, if I remember to do it, so you guys can actually study the chart. It's actually a good study. This is, it's simple, but the pitchforks are a little bit more advanced than most traders actually use, because most traders don't know how to use them. But it's simple enough to where you can, if once explained, you can actually follow them. The biggest thing is actually drawing the pitchfork and having it fit your pattern. If it fits your pattern even closely enough, it'll actually get you in and out of a trade, like I would say 80% of the time. It'll actually give you pretty good trade signals, which is all you really want. But that's all I have for this one. This is BGS out, and I'll see you crypto kitties on the next one. Like I say, hopefully you guys didn't put your rent money in this stuff. And like I said, there's a reason that you put your lunch money into these things, because they are extremely volatile, and they're extremely contentious. And the big boys are coming in with their clubs and their axes, and they're not playing. So, like I say, a good time to make some money is also a good time to lose some money. It just depends on which side of the axe you're on. But with that, I'm gonna jump off of here. This is BGS out, and I'll see you guys on the next one.